We've had our September mining production numbers out today, and these reflect some disappointing pullbacks in output, although the trend was not a surprise. Total mineral production in September shrank more than 8% year on year, with platinum group metals plummeting by nearly 18%. Joining us now as we look at the commodity space and what all this mining data means, Bevan Jones, General Manager at London Commodity Brokers. Welcome, Bevan. I'm relieved you're here, not in London, so we can actually see you and discuss this with you. Yeah. What's your feeling on the market reaction to the fears of the fiscal cliff and what it means for commodities?
I think commodities are really going quiet into the end of the year. You know, people are winding down their positions. Nobody wants to take any big positions. Obviously, the physical consumers and producers have to carry on business as normal, and we have to deal with the weak numbers coming out of South Africa. But, you know, prices are quite weak at the moment, so you don't really want to be producing a huge amount at the moment. I think, you know, commodities like oil, your industrial commodities, oil and platinum, are just going to follow the equities market, really. And I think, you know, people are going to be looking for direction to the equities market, and that's really going to drive where we go from here.
Of course, there always different aspects and sides to looking at the commodity markets. I think a lot of what you're implying here is on the demand side. On the supply side, there's some interesting developments too. If you think of the South African situation, platinum, we ultimately could influence the price if matters change on our production side.
We could, but on a spot basis, it's still a very oversupplied market. So those things, those structural changes take a long time to play into the system. You've got, you know, your mining cycles, and you know, sure, in a year's time or 2 years' time, you will probably see a structural shortage in the platinum market. But there's a lot of people also who've got platinum stored in vaults, much like gold, and you know, they can always come in and sell. So until you get that marginal supply-demand situation in platinum, you know, it's not going to shoot the lights out anytime soon.
So even though you've got the implied warnings from company heads, platinum company heads, but also gold heads, that the restructuring could come in the wake of these wage awards, it's not going to affect
Look,
actual
in the short term, you just have to play the market on sentiment. I mean, you know, people will buy gold because they think there's, you know, problems coming, inflation's coming, and now I guess with the money supply tightening now and the banks starting to put money into the system, you will start seeing inflation probably coming up, and then yes, gold will perform quite well. Platinum, unfortunately, is just going to ride out the economic cycle, and it looks like for the next couple of weeks at least we're in a bit of a negative mood down. But you know, this whole thing about China electing this new party now, once they're all in place and all these new state-owned entities and we know who the heads are, we'll start to see, you know, buying kick in probably from China, because they now have to start, you know, rebuilding.
Almost a cynical view there. Ashraf,
so no, just on that China point, you know, have they basically held off for the past 5 to 6 months? Is that your view? Because with the changing of the guard coming through, they've decided we're not going to
nobody wants
policy,
to do anything rash, which could lose them the position. Yeah, but China's obviously had some major issues in terms of getting financing. A lot of the commodity traders went out and financed their positions on the back of debt, and then of course the bottom fell out of the market, and they're not able to pay back their debt. So they're finding it very difficult to finance their trades at the moment. So everyone's really just gone to ground, and I think at the end of the year we'll probably see a resurgence. But I'm not looking to buy anything before the end of the year, I think.
Good.
Yeah, my sense is that the Chinese officials that are assuming office will want to actually try and show growth to the best extent possible. You know, to actually reflect that they've made a difference in office right from the get-go, and that may provide a boost. But my fear is that that's pretty much pushing on a stick in China at this stage, is that they've actually really shot their vault as well.
Yeah, but I think the Chinese can do things that very few other people can, because they have this way of sort of acting sort of as one entity almost. And you know, I was just saying, you know, the luxury goods market's doing very well now because all these presents have to be bought for all these new people in office.
Are there commodities that you feel might be particularly vulnerable in the next year or so?
Well, I think oil's pretty vulnerable. I mean, obviously with shale gas still, you know, look, now that Obama's back in, he's going to be pushing the environmental agenda quite hard and probably capitalizing on that. And of course, shale gas plays into that very well. Shale gas works in the US. It's a little bit more difficult in South Africa. We've got different rock types, etc. But I think, you know, gas will remain cheaper for longer, and that's bearish for oil. It's bearish for coal, certainly in the US. So I used to be, you know, in the middle of this year, I was actually quite bullish on coal. I've actually turned into a bit of a bear, and I think, unfortunately for our South African producers, good for Eskom, you know, prices might stay lower for longer.
But that won't mean electricity prices will come down.
Unfortunately not, no. That's
Chris had to get that in. Yes.
Our electricity prices, unfortunately, are not tied to the coal price, yeah.
Well, it is tied when the prices
when they
go
want
up,
to.
yeah, and that sort of thing, yes.
Bevan, just one last question. You mentioned mainly the energy complex. What about the base metals?
Yeah, look, I think copper is obviously going to find a resurgence in any sort of industrial and you know, build out there in terms of China, but it's going to be more sort of targeted. So copper and aluminium and nickel, I think, because, you know, steel has to recover as well. India is going to become the #2 steel producer in the world, and so India and China are going to be driving that massively.
What about iron ore? Because from the outside, as a naive viewer of things,
yeah,
spectator, everyone's coming to market to produce iron ore.
Well, they are, and you've seen a massive sell-off in iron ore over the last couple of months, but just recently, over the last couple of weeks, we're seeing a tick up, and the forward curve is actually starting to move higher as well, which indicates that traders in general are expecting higher prices for iron ore. So I think iron ore, steel, these industrial commodities, copper, aluminium, will probably perform quite well. Gold has to be that fear and that inflation trade. If you think inflation is just around the corner, then sure, climb into gold. I'm not so sure.
My sense is that if there's any acrimony with the fiscal cliff, that the Fed might actually step in and be more decisive and up there 40 billion a month to 60 or whatever, make it open-ended, whatever the case might be. But my suspicion is that that's what's going to happen. I'm not sure if you want to comment on the agricultural commodities, but I mean, earlier this year we had droughts and calamities and all the rest of it. That seems to have gone away.
Good closing topic.
Yeah, look, I mean, it obviously, again, you know, corn prices obviously went up quite significantly, and of course around the world they went up in sync. That really takes a little bit of time. It takes probably 6 months to feed into the economy. But you know, I guess the Americans have been able to swallow a lot of those cost increases and haven't pushed them onto the consumer as much as you would expect. And of course, they're still sitting with quite a weak economy, so they can't really just, you know, push oil demand and food prices up. But I think structurally it has moved the grains market into another level, and if we see big price rises from here, you know, it's just ratcheting up all the time, and that's the problem.
Have you got mealies stored under your bed?
Yeah, I'm not so sure you'd want to do that, but you can certainly play that in the futures market. Yeah.
Popcorn.
There you go.